Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our pre-market trade plan setup. What we do is we get together and take a look at the structure of the market. I start with the basic routine of looking at macro to micro in terms of the trends and the different time frames. Then we look at the structure of the market, drill down to the trade levels that we're looking at, the targets that we're going for, and our hypotheses for the day. My name is Doug McKay. I am the founder and head moderator and head trader for Quantum Leap Trading. Quantum Leap Trading is a private group of traders. It is a subscription service, so we have a live trade room. So if you're interested in finding more about that, give me an email at quantumleaptrading@gmail.com or give me a call 647-545-8065. I love talking about the markets and all things trading. Okay. Before we get going, I do have to get the disclaimer out of the way, so let me get that done. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions. Make trading features or any instrument involves risk loss. Please consider carefully whether features or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan and your own risk metrics. Okay, taking a look at the news, we had unemployment change minus 6.4 versus minus 9, so a little bit better. Unemployment rate came out pretty much as expected, so those are both Canadian, by the way, and didn't really do anything in the market. The big news right now is that there's proposal out on the table with Greece, and we've had a big rally. The funny thing about this whole week is that the levels themselves have really not changed. I mean, I've had to make very little changes in terms of most of the changes I've made in the ES levels. The wholesale inventories we have at 10 o'clock, and then Yellen is going to speak at 12:30, so that'll be the big one today. But what I was talking about is that these key levels. I made a joke. I had to change 2066 to 2066.50 as the balance in this area, and the biggest change that we've seen is that the key line in the sand has shifted from that 58.25. It's been slowly shifting down from, we started this week, it was at 59.75, and as we tested these areas lower, it shifted down, and today it's sitting at 2055.50, which I think is quite appropriate because of the fact that the year open is 2055. So why wouldn't that become a very clear line in the sand? But the line in the sand I'm talking about is the microcomposite value area from February 5th until now, and I should have 5th in here. It's the gap up day from the beginning of February. So just because you might get slightly different numbers if you go right from the 3rd of February. Whoops. I'll fix this later. Okay, so this has been posted into the room, so I don't need to talk about that. Let's talk about what we did yesterday. Yesterday, our main hypothesis was a rotational day with a downside bias if we got below the key line in the sand. Sorry, where's my other sheet? And I was going to be trading short if we got below 58.25, and I'd be trading long above that 64, 65. Most of my trades were taken short yesterday, and I only traded until about 1:30. I think is when I took in around that time I take my last trade, and I took the rest of the afternoon off. The big target for us, of course, was that 2039.50, 2038 area. And we went down there at the end and closed out. So it was actually it was whippy in the morning, but it was more orderly in the afternoon. Of course, I've been trying out new software and I spent the afternoon doing that. Anyway, as of yesterday, we were up another 13.5 points for the live room that started this week. We're up 60 points overall. So I think everybody that is a member should have very clearly have their room paid for and then some this week already. So we'll clear this out because we don't need that, and we start a brand new day. What I like to do is I like to start with a normal routine of just looking at where we are in the trends. I start with a monthly with candlestick chart and 9 EMA and a 20 SMA. Those are all the only moving averages that I look at. And basically I'm using them to look at slope and separation for trend and when trends are violated. And then I look at a study that I created called Naked Crosses. We have good slope and separation. We're losing a little bit of it here, but we are holding the 9 EMA. Key point of the matter is we had our first close since January testing that year open at 2055, and the bulls are still much in charge. Now, last night I posted a chart in the. I'll bring it up here because I think it's interesting that you should see this. And I've been commenting. Let me do it two ways. I'm going a little bit off track of what I usually do from our morning routine, but I'm going to bring this in. Switch this over to a 30-minute. Okay, and the chart's not as important. I'm just going to get this up here. And this is something I posted into the room last night for you guys. I was mentioning earlier this week that you can see this is the end of last week, normal volume. And then when you get into this week, from Globex on Monday through every single period, both Globex and RTH sessions, we've had the OTF involved. And this is telling me that somebody large, a commercial paper, is taking a position. Now, Howard and I were taking a look at the COT report last night. I'm just going to bring it up so you can see this. Oops, wrong one. You can see that the commercial is gone net positive, okay, in the last couple of weeks. So commercial paper is building a position to the long side. Now large spec is still net short, but I think that this is a systematic accumulation using the small specs to push the market down in order for the large commercial to build a position to the upside for what we anticipate to be a topping move, a move to break that unequalized highs between June and July and from the Globex and the RTH, and I'll talk about that a little bit more. But this is giving me an indication, and the fact that we have not broken down, even though we went down to 2039, that's 2034 and a quarter on Monday. That's still within a normal pullback. We have not violated the trend in the longer time frame, as you can see here on the monthly. So, I think it's accumulation for another move to the upside. Going down to the weekly, you can see we do have that weakness showing. The last 2 weeks we've been below the 9 and the 20. And we have not been able to get back above it. It is a bit of a trend down. It would be nothing. We still have a measured move down to 2019. And I don't think we're going to see that today. I think we're going to explore some of the upside of this today if we hold that 55 level. If we hold the year open, I think we'll get a little bit of price discovery up that doesn't mean that we can't come back down and test that 19 before it gets violated. It doesn't get violated until we get up above the neckline again. And then going down to the daily, you can see that, this is the head and shoulders we're talking about. Here's the left shoulder, here's the head, here's the right shoulder, and then the breakdown. The measured move is down to 2019, but we have had a trend down, and we have not been able to get above the 9 EMA all week. This is the first time that we're doing so. So we're peaking above. A test of the upper 20 SMA is going to take us up into that 2079.50. My main target above today is still at that 2075.50 area, which I'll show you in a minute. Going down to the intraday, so we can take a look at where we are within the Globex coming into the RTH session. You can see that we've got consolidation on the 4-hour. There, we're creating a bit of a naked cross right here at 2057.75. Write that down in your journal. We still have the one above us at 2098. Was it 2098 and a quarter? Oh, that's on the 30-minute, I believe, or the daily. Let me just go to the daily because I think it's on the daily. Yeah, it's on the daily. 2098 and a quarter. So write that one down in your journal as well. Going down into the 30-minute, you can see that the 30-minute we've been trending up pretty strong throughout this Globex. We had the Greece news come out. We gapped up and spiked. We created a naked cross on that spike, 2052 and a quarter. So that will be retested again. And going down to the 5-minute, that one got taken out. That one got taken out. Right now we have start of a trend. We do have a naked cross right here at 2066.51, right into balance. We'll take a look at where we're going to open. We do have a bit of a technical gap to close here. 2067, 2068 will close that, likely get closed even before the open. But we do have the start of a trend or continuation of a trend pattern on the 5-minute. So the market is coming in somewhat strong into the RTH session. So let's take a look at the big picture. So this is this composite goes back to 2013. My micro composite that we've been talking about goes back to this gap up day right here, which is February the 5th through till today. The last the value area you can see on that one is shifted down to 2055.50. The last 9 days of balance is at 2057.50. That's the most traded price in the last 9 days. Value area low right now is 2047.75, no change from yesterday. Value area high is up here at that 2069 and a quarter. 2069.50 is where they tried to hold value the last time and failed and came back down. We're currently trading just below that, and I would expect that this to get targeted 71 if we get above it, and then that 75.50 to the upside with a little bit of possible responsive selling coming in here at 74. I expect it to be another whippy day here, and we could even trade from this 59 up to this 82 level and just chop around in here as we try to accept value higher and mature the auction between these three distribution points of 75.50, 71, and 66.50. If we get back below the 59, then I'm anticipating coming back down and testing that year open yet again with the main target below 59.75 at 57.50, with support coming in between 55.50 and 53.75. If we break below that 55 and we don't hold 53.75, then I think we get continuation down and we go down. They've been down here a couple times. Let's just take a look at where they've found value down here in the last 3 days. Is down here at 2049, where the buyers have really stepped in. And just taking a look at the last 2 days, whoops, just do this way. Bring this back in because that should be there. In the last 2 days, 50, 50. So mark those two numbers, 50, 50 and 40, 49. I'd go with the 49 myself as a possible destination point if we get below 50, 350. Okay, so let's drill this down and take a closer look at. Sorry, I was late getting to my desk this morning. We take a look at how our levels played out yesterday. We were talking about keying off of the 68.50 area. We rejected the breakout. They got back below the 60. We got short. I took a bunch of shorts right here and got funded and then taken out at Theo a couple times. Then I finally got my runner. But once we did that, we failed to get back above and close above the range high, and then we sold off all day, coming down to our targets. They found value at 45.50, rotated back up, but were unable to get back inside the IB, and then they rotated it down to our targets, our main targets below, taking out the naked VPOC and naked close on the close. We stole the VPOC into the close the day before, so we were expecting it to come back there and test that. Let me just get rid of all these and we'll start moving our numbers over. Sorry, I should have had this done for you already. Talk amongst yourselves. Leave that there. Funny how our VPOC shifted to 51, eh? No surprise there. Return to the scene of the crime, the FOMC number on Wednesday. Okay, I can leave the other ones down there. All right, bring up our Globex chart. All right, so we got another Globex low down here. This 38.25, 38.50, 39 area has been, incredibly important, where the buyers have really been stepping in there. So our overnight low all the way down at 38.25, just below yesterday's low. Come on, here we go. Our overnight high is, when this has been the case a lot of the days this week, is we're coming up and making a new high coming into the Globex. So right now, coming into the RTH, right now we have a Globex high at 69.25. I doubt that that's going to be it. but you never know. They're probably going to expand it out in the next 30 minutes as we're coming in, so we'll have to keep an eye on that. The VPOC overnight, 64.50. Basically just above our open. I think we had the same scenario yesterday where our VPOC was at our open. And there's no real CLVN. You do have the value area low overnight at 59.50, right at that CLVN. So I'm going to put a LVN right there. Well, I'm going to use it as a trade area, so I might as well just put it in here. You've got 61.50 as the value area high from yesterday, and then 59.50 as your value area high or low from Globex. So value area high to value area low from RTH to Globex. What I really think we have to do is put a double trade area in here, and we don't want to get long until we're above 61.75, with our first target being 64.50, with continuation up into the RTH high and the overnight high. I doubt the overnight high is not going to get taken out before you come down here, but you never know. If we leave that overnight high alone and come down here and bounce off of the value area high, this will be a nice trade that could be a continuation trade as well up into that 73, 75, and 75.50 area. But to get short, I would have to be below this 59.50. Really want to probably wait and get short around 57.75 to be sure, with a target back down to the midpoint and the VWAP and the IB high or IB low from yesterday. So that's going to be my main target below, but you can't forget just above it we have the 55 and a test of that 55. And in fact, I'm going to do it this way. I'm going to take this out, and I'm going to have 55, 50, 55 area, and that is going to be our key line in the sand. And what I mean by this, what happened here? Hold on a second, I gotta be, okay, that's because I just got confused there for a second. I'm going, our VPOC was not 39.25. Our VPOC was 51. They took the VPOC out in the ETH session. So let me just send this back to the back again. And what I'll have to do is I'm going to have to change this. And this is going to be naked VPOC and all those other things as well, trade area and FOMC. So below 50, 58.25, 59, get short into 55. You want to get scaled by the time you got to 57.50, really. So you might want to just front run that 58.25, off the break of 59.25 into the 57, but I really think if they get below and back inside of this value area, that they'll come down and at least test the year open again, if not come down and take out the naked VPOC. Below the naked VPOC, there's really nothing down there. You've got the 9-day value area at 47.75. That's the microcomposite value area low for the last 9 days. And then you've got your value area low at 45.50. And then below that, we've got all these targets down here. Even though we took this out in the extended session, did we take it out in the extended session? Yes, we did, because we got down to 38.25. It still remains naked because of the fact that it is it's a naked VPOC in the RTH. So again, we've got this cluster of targets down here. You've got the naked close at 40.25. Oops. I'm sorry, is it 41.25? Close 41.25, sorry. 41.25. And then you've got the naked VPOC and the overnight low again, all down here. So this becomes, a big target if we break below the value. And then right below that, the target I'd be looking for is that 34.25. That's the fractal low, the Monday night gap down low that we've rallied from. And then targets below don't change. 30.25, 24.75, and that measured move to 19. A little bit of support coming in at the 26.75 area. All right, to the upside. And somebody made a comment on my YouTube. There seems to be a lot of trade areas and targets, but those of you that are in the room understand that these are the inflection points that I'm looking at in the trade areas. So I'll enter trades there, but I'll be looking to add on as we go for continuation. So if I got short below, 59, I'd be targeting 57, but I'll be looking for continuation to 55, seeing how they react there. If they break it, then I'm adding into that trade, and then I have my next target down at 51. So it's defining where I want to make a decision and take risk on. And there are a lot of them a lot of times, and sometimes there's less of them, but at $50 a point, there's a lot of money to be made just between a target and a trade area, depending on how you're trading it. So above, we're back into this balance. It looks like we're going to leave that 69.25 alone. So it changes things slightly. The trade area I'll be looking at is this 68.25 for a breakout of the range and above range and value to take out the overnight high at 69.25, with the first target above at 71. That's that CHVN. Let me get rid of this so you can see these numbers here as well. This is the 71 right there. And then above that is my main target above range and above value, which is going to be that 75.50. There is the 73.75 naked close and the 74.25 CLVN, but 75, I think if we get back above 69 this time, that they're going to go for that push up into the 75, 79 area. All right, and then nothing changes to the upside. We've got little bit of possible responsive selling here at the 79.75. Above that, 81.25. The FOMC number in June, 84.25. The half gap fill at 85.50 from the week ago gap down, and then 87.75. It should be 87.50. And then the big target, extended target above, is still up at that 93.75 area, and that is the most traded price going back to beginning of February. So that's what I'm looking at in terms of my trading. My main hypothesis is a test down. If we open up inside range, a test down to test that value area high, and then find responsive buyers, rotate back up through and go for this target at 75.50. I think it's going to be a rotational day with an upside bias unless we get below this key line in the sand. If we get down here, then I'm going to start looking short, and I'm going to take the short into 55 because I think they've got a great target here at 57.50, considering they'll be back into value and they'll be coming back into balance around that 9-day microcomposite VPOC. And we could bounce from any one of these three areas, the 60 to 59 area, the 57.50, or the 55. But if we break 55, then I think that it's going to embolden the sellers, and they're going to push it down, and we'll get an 80% value area destination trade down to the value area low down here, and then a break below value. Then all bets are off, and I think that we're going to see lower numbers next week. I don't think we're going to get down but much below. I mean, we might get back to 39 again today, but I don't think so. I really think that the the extreme move will be down into this 45, 47 area, but you never know. That's why we have our levels. If we come up and we open up above and we expand the overnight high, then I'd be looking for initiative buyers to come in and immediately take us up in to take out that naked close and target above. Just be careful. We may pop out, take take out the overnight high or expand the overnight high and then come back down here. So really be careful on the breakout trade of the range high. The better trade is if we reject and we get responsive buyers stepping in the 59 to 61 area. I'd really like them to come down, hit that 61.75 and bounce really quickly and really make the move from there. But we don't know. All right, let's take a quick look at gold. I know I'm running a little bit late. I've been all over the place this morning, but I was late to my desk, and I just really thinking it all through on the fly right now. Okay, so balance right now is 62. We talked about that move. If we broke the 60, I think it was 61. We've got to shift to, I think it was 61.40 yesterday. You have to take the look at the video about moving down towards that first target in the 57.58 area. Nothing really changes. I still think we're going to see chop in this area. Gold has not been a flight to safety, so therefore there's weakness. There's nothing really to lean against down below us until we get down to this 1150 area, 56, 56, 50, 60, 1150, 60. I can say that. And look for responsive between 52 and 50. But really, the where you really want to trade off of right now in gold is this 46, this 44.60. If we bounce from there, I think you got a decent shot to come up, test the value area low from this microcomposite. But if we break, you've got a great target down here at 37.90 with continuation down to 28. To the upside, there's you have to wait till we get above this 63.10. 63.10 breaks us outside of this value, and above the CLVN, I think they'll go for a run up here into this 67, 68 area. And then possible continuation up into the 7260, 7250 area. You can see that's where we are trying to hold value. Actually, should be shifted over to here. You can see it matches up with that pretty nicely. And then above 77, 78 area. I'm not expecting a much bigger move in gold. I think we're just this is a pretty blunt area in the composite for gold. And this composite goes all the way back to 2008. The real exciting trade's not going to happen until we get back closer to the composite VPOC. The most traded price going back to 2008. Anyway, it's almost getting close to the open, so I'm going to conclude the session this morning. As always, trade well, trade safe, and we'll catch you on the flip side.